All right. Here we are again this morning, ready to fight the good battle. All right, make sure my camera's working just right. Okay, guys, what we're looking at here on the screen is what are we looking at on the screen? We're looking at up in the upper left-hand corner. We're looking at the S&P 500. Up in the right-hand corner, we're looking at the Dow. Bottom left-hand corner, looking at the little cousin Russell 2000, and in the bottom right corner, we're looking at the Nasdaq Mini. So these are all the mini contracts, and they are the indexes in the futures market, and we're getting ready to watch these babies go. Opening bells in about 4 minutes. 4 minutes? Yeah, about 4 minutes. What's the news? What have we got in the news today? Let's take a look real quick at the news. We've got building permits coming out at 6:30, so that's already happened. That's about the only thing that's going to happen today that's going to move the market. We got the Fed Waller speeching at 10 o'clock. We got Fed Williams speeching at 10:30, and then we got Bowman speeching at 11. So one bang, bang, bang right after the other. They might move the market a little bit. Usually not too much unless they're changing the interest rates, and it doesn't look like they're doing that today. We've got crude oil coming in at 8:30, so we have to keep that in mind. Housing starts came out at 6:30. Were they positive or negative? Housing starts. So consensus was 1.38. The previous was 1.269, and the actual was 1.358. So I would say it was lower than the consensus, but higher than the previous. So is that going to be bullish? We don't know. All we know is that it might have a tendency to move the market here on the opening bell. Which direction? We don't know, right? It's not for us to determine, really. We can kind of look at those numbers and kind of have an idea in our head what we might think it might do, but what the big players, what the big banks and hedge funds think of that information is way more important than what we think about it. All right. So we just need to know that there's going to be something active right there, and it may make the market go up or down. And then we look at the market and determine at that point whether it's going to go up or down. Oh, look at what I'm looking at. This is the 2-minute chart. We're going to talk about the 2-minute chart a little bit today because we're talking about automation, right? So let's come and look at our 1-minute chart. This is automation week. So tonight we've got our class. Look at this. My internet I think this projection screen stuff that I do on the YouTube takes up so much energy, takes up so much bandwidth, takes up. I notice when I'm running it, my computer runs quite a bit slower. It's a pig. I think it's a pig. I think this YouTube projection software is a bit of a pig. So nonetheless, here we go. Dow up in the upper right corner, S&P down here in the upper left corner. Cousin Russell's already dropping out the bottom. Look at that. There he goes. Nasdaq sinking a little bit. The Dow's rallying. Market's going to open here in 1 minute. Yep, we got 55 seconds, and the bells are going to ring. So let's see who we got in the house. We got a couple guys saying hello already. Gary Thompson, nice to see you, Gary. Glad you could make it first thing in the morning. We've got Matt. Matt's here, ready to go. Look at that little cousin Russell, Matt. What are you going to do? We got Steve. Steve's in the house. Good morning, Steve. All right. Anybody else wants to say good morning? We'll make you famous. We'll put you up on the screen. Oh, wow. Look at the Dow. Did the market just ring? No, that's early. That's early. We got 22 seconds. Getting a little excited. There. Jumping the gun. Those are just guys getting out of their short positions, I think. Although they're buying early. Look at that. They think the market's going to go. Before the morning bell, they're getting excited. Thumping their hoofs in the chute. Ready to go. All right, here we go. There's the bell, and away they go. All right, S&P's breaking right here, first thing, trying to break higher. Going to think that it's going to rally out of the top of that thing on the S&P. Do you want to take it? Why not? You can take it. Take it with one. Real gentle, cautious, careful move. So we're long the S&P right out of the gate. Don't usually do this, but we're going to give it a shot today. Cousin Russell dropping like a rock. Oh my goodness, look at Cousin Russell go. Oh, S&P, see that? This is why we don't take these things right out of the gate. They fake you out one way and then the other. Then they take your money. But not Cousin Russell. He would never do that to us. He would never do what the S&P just did to me. Look, it wants to go again. Here it goes. Try it again. Now the Dow's flushing like a toilet. Nope, it's going to come down and whack us one more time. See? This is why I don't do this kind of trading right here in the morning bell. It's tough to catch a rising market right at the morning bell because you think, oh, it's crossed the yellow dots and away it's going to go. Sometimes it does, but most of the time it just whips you back and forth. So we're going to turn on the autopilot here in a minute and just let the autopilot trade. Oh, look, we got knocked again. How about that? Oh, wow. Look at the Dow flushing. You know what the market was doing yesterday? You know why there was so much good trending markets yesterday? Why it was so nice and the market was working so well for us? They were voting for House Speaker. They thought they were going to have a House Speaker yesterday. Look at this. Failure twice on the S&P 500. Down $225 right out of the gate. Now you know why I don't do this very often. I don't trade right out of the gate very often. Sit and watch these markets go. If you can catch one though, man, it's like catching a big old whale in the ocean. Okay, the NASDAQ trying to get ready to go. NASDAQ wants to go tall here. Let's ride the NASDAQ. See if the NASDAQ wants to. Oh, that's the micro mini. Well, maybe that's okay. We'll feel bad because it's going to take off and go to the moon and all we've got some micro mini on. We'll see what's going to happen here. I still think that S&P wants to break higher above those yellow dots and go to the upside, but not with the Dow flushing like that. Even the NASDAQs looked like it wanted to go, and now it's not going to go. Come on, baby. Russell. Matt, are you in the Russell short? Look at that thing go. We're going to dig ourselves into a big hole here. Look, the NASDAQ, if I'd have been in the mini instead of the micro mini, we'd have been doing okay. But I put the micro mini down there in the NASDAQ so I could show you that the micro mini, we could trade the micro mini too. And then for those new traders who are really scared about how much money we're trading here, $225 down land, that's going to kill me. Well, trade the micros minis then. Look, it's 10 times smaller. So now we're up $40. There's our $50. If that had been the real money market, that'd have been $500 and we'd be done for the day. Well, we'd only be back because we'd have our $225 back. Come on, touch it, touch it, touch it. If you get nervous, grab that stop order and you say it might not touch it. Slide that up there. Protect what you've got. No, it touched it. All right. That was a good trade right there. We caught that NASDAQ rally, but we caught it on a micro mini. So it was tiny amount of money. Look, our S&P not breaking. There it goes. We'll try one more time on the S&P. Okay, here we go. Now I put 2 in there so we can put 2 different target locations. Where are they going to go? Let's come in here and see. We're going to put one. See the previous high right here? We'll put one right there. Just inside of it. We don't want to put it on the outside of it. We put it, so it makes it easy to hit. Put it on the inside of that resistance, all right? Come on, take one off. Grab it, grab it, grab it. You want to do it. I know you do. There we go. Okay. So now we got this other one up here. We can kind of let this one run. We bring the stop up. Just bring the stop up to break even. See if it wants to go again. Come on, baby. Come on, rock and roll for me. It's going to flush. Got to lock in a little bit. Well, $100. It's better than a kick in the pants. All right. I don't usually scalp out these morning bells. I usually sit and watch them go, but I thought today we would play a little bit and see if we can't make a little bit of money off these morning. Because sometimes you sit and watch them and you just feel real bad that you'd let them go by, right? You have to be willing to take a little bit of a loss sometimes, though, because they move so fast and hard sometimes that your stop is, they just want to grab your stop. You guys got your warm tea for your morning session? All right, let's see what's going to happen here. Should we set up our autopilot? Let's set up the autopilot and see what we're going to do with the autopilot. Yesterday we went through, and for those of you who are here, we had a really good meeting. We got a couple more guys in here. Oh, Matt's coming in and saying, of course, he's in the S in the Russell, taking a short position, I'm assuming. We got Kurt in the house. Good morning. John Mackey's made it out of Canada, and we've got Michael Bruce. Nice to have you, Michael Bruce. It's good to see all you guys in here. If anybody else wants to say good morning, we'll throw your icon up on the screen. All right. Oh man, look at them. Russell dropping still. Matt, are you still in it, or did you scalp? You still in this all the way to the bottom? The NASDAQ starting to show a little weakness here. Maybe what we could do is we could wait for it to give us a little pennant formation, little red pullback, and then anticipate the next leg up, right? So maybe A, B, C, rally up. But oftentimes in the morning, it doesn't do that. We don't get a follow through in the morning session. Sometimes we're just doing the sweep. The sweep? Man, what's the sweep? The sweep is where they go up, they take out everybody's highs, then they go down, they take out all the lows just to prove that they can wipe you out. Everybody who wanted to get in and put their big wide stops back and forth. They sweep everybody to the upside, they sweep everybody to the downside, and they set a range for the day. Okay, so we have a range for the day. And the range for the day, if it stays inside that range, the market's just neutral. It's not really doing anything. But if it breaks out of that range, then we're either bullish or bearish. So at this point, the NASDAQ flushed up. Can you flush up? The NASDAQ rallied up really hard, and now it's flushing back down. So it's flushing back down. Now it's coming down and testing the 50% range right in there. You can see if we draw our 50% tool across there. Where is 50% tool? Ran away and hid. There it went. So 50% is right there. And right there is testing that average true range. The average true range. We can move that down. Where is that? That's 33%. So I got my upside down for retracement. Boop, boop. We'll do it like this. Get my little tool in there. So the market's at 69% retracement, 73% retracement. Just measure it down there as we go. 75% retracement. Is it going to close below the yellow dots? It has 8 seconds to do it. What's it going to do in those 8s? 4, 3, 2, 1. Boom. It did not close below it. How about that? Rock and roll, man. This is a long trend. Let's come in here. Drop our order in there for a long position. Let's do a second one. Actually, I'm using my reversal. I don't want to do reversal. I want to do, now I've got it in there. I don't know if I have time. We'll do one more. Oh, that's not what I wanted to do either. Now I'm getting comedy of errors here. See if we can't get a little rally out of this thing, turn around and break higher. Otherwise, we just get out. Except for I put my reversal stop entries in there instead of my exit stops. Okay, Cousin Russell's getting ready to go long. Well, that didn't do us any good. It's going to close below the average true range now. And I should not have ever even got into this market. I just made a mistake. I used the wrong tool and put the wrong orders on there. And hate it when that happens. Russell. Oh, he didn't break above. He broke above the yellow dots, but he didn't close up there. So he's showing like maybe we'll go back down, land. Maybe this is a little flag to the downside. Maybe that's our ABC on the little cousin Russell right there. Did that stop you out, Matt? So now we're looking like maybe we'll break lower once again on this little cousin Russell. Man alive, everything's dropping. We must not got a speaker. Wonder if they're going to vote this morning. Didn't they say they were going to vote for speaker again this morning? They did yesterday. I think that's what caused the market to take off like a rocket ship. I think they thought we were going to get a speaker. That's a sell signal right there. If it can hold below that line right there, that horizontal line, it's bouncing. Does it want to hold below? There it is. Is it going to hold? You got 44 seconds now. I hate it when that happens, when it breaks a little too early. There it goes. Now hold down there. Hold on, buddy. It's going to pull back against it. Make us wait. Let's bring that full screen so you guys can see it a little better. This is what Matt's trading. He likes to trade little cousin Russell down here. Let's see what cousin Russell's going to do. Pulling back. He's not going to close below that horizontal line, is he? Well, he can't decide. He's like, maybe I'll go back up. Maybe I'll go back up now. Okay. You going to go back up? If he's going to go back up, I had somebody write me and ask me, they said, hey, yesterday we did all that work on the autopilot. Let's go look at the autopilot, should we? And we did it on the S&P 500, and we had the Yahoo class, the class of Yahoos. Oh, Matt says he got stopped out. Stopped out with a profit, I hope. Any possibility to automate Elliott waves and Fibonacci levels on the charts? AK saying, is there any way to possibly to automate the Elliott waves and Fibonacci levels on the charts? There is, but you need tools that have been designed around Fibonacci and Elliott wave. That's why we use the Bulls and Bears. The Bulls and Bears is a Fibonacci Elliott wave tool, and so is Zigzag. Now, I haven't talked about Zigzag, but Zigzag is also an Elliott wave tool and a Fibonacci tool. And you can use those tools, and you can automate trading Fibonacci and Elliott wave with those tools. But Fibonacci and Elliott wave is, I don't want to say they don't really throw buy sell signals, because we do. We buy and sell off of Fibonacci and Elliott wave all the time. But Fibonacci and Elliott wave are more fundamental, basic structures of the market. And then we use our buy sell signals, which are recurring price patterns or some sort of mathematical model, to buy against those Fibonacci Elliott wave settings. So Elliott wave is just the ABC patterns that we're trading here. So when we say, hey, look at all the ABC patterns, if you were here yesterday, we did a bunch of ABCD pattern work, and I do ABCs in here all the time. ABCs are Elliott waves. It's just all an Elliott wave is two ABCD patterns in a row. So that gives you an Elliott wave. So an Elliott wave, we automate those all the time. I mean, we trade those. That's what we did yesterday. We set up basically an Elliott wave pattern trading strategy, right? Because we were using the ATR, which tells you where those ABC patterns occur. And then Fibonacci is just a ruler. All Fibonacci does is it's a ruler that measures those Elliott waves. So we take an Elliott wave, an ABC pattern, and we measure it to see how far back it's pulling against itself. So that gives us what we call the Fibonacci bow tie, right? Now, that's a little bit beyond the scope of what we're going to go into today, because I'm going to talk a little bit more about the autopilot. But can we automate those things? Yes, that's exactly what we're doing here, AK, is we're automating the Fibonacci and Elliott wave. Because Fibonacci and Elliott wave, to me, that's I have, my count, measure, setup, trigger, and follow through. So I have my 5 steps to a successful trade. Count, measure, setup, trigger, and follow through. What do we count? We count the Elliott waves. That's the very first thing of our count, measure, setup, trigger, and follow through strategy. Count the Elliott waves. So we want to know where we're at in that drive, right? Because ABCD makes an Elliott wave. So where are we at in that double ABCD pattern? And then measure. What do we measure? We measure those drives. How do we measure that? With Fibonacci. So Fibonacci is the second component of our 5-step count, measure, setup, trigger, and follow through. Then we set up. What's the setup? Well, the setup is, are we going to get in on that ABCD pattern? What's the mathematical model that's going to help us do that? And then that's the setup, and then the trigger. So what's going to trigger it? Well, it's the breaking of that trend line. Trend line is going to break. That's our trigger to get into the market. And then follow through. What's the follow through? That's the exit. How do we get out of the market? So count, measure, setup, trigger, and follow through. So when we trade, that's the mindset that we have to have. And so can you automate Fibonacci and Elliott wave? Absolutely. As long as you understand that Fibonacci and Elliott wave is not the setup and trigger. Fibonacci and Elliott wave is the foundation of what we're trading. We're trading the ABCD patterns. Okay. So those are the trend. So the trend is your friend, right? So we need to find the trend, and the trend is the move from A to B and then from C to D. Now, little cousin Russell down here is getting he's running a little sideways. Oh my goodness, look at NASDAQ. NASDAQ's trying to break higher. What's that going to do to cousin Russell? Usually the NASDAQ doesn't have a lot of effect on cousin Russell. We look at these four markets because they're the indexes that kind of travel together, and we like to see one take off and lead, and then that tells us the others will go too. But little cousin Russell, that's why we call him cousin Russell, because he doesn't like to do what the big boys do. He likes to do something different. He's always down here riding his tricycle while these guys are riding their bicycles. And so little cousin Russell, and he's little because he's not quite as big. If you trade him, you don't make as much money, but you also don't lose as much money. But yet he's still big enough market. He's still full size market. He's still a good market to trade. I love cousin Russell. Cousin Russell's a good market to trade. I don't trade him very often in the mornings though, because I don't know why. Because I let Matt do that, so Matt can tell us what's going on with little cousin Russell down there. We'll get more into that, AK. We'll just stick with me and hang out with me. We're going to talk a lot about Fibonacci and Elliott wave because that's my jam. That's what I like. I love Fibonacci and Elliott wave. So, Oliver, did I mention Oliver's in the house? Oliver from Frankfurt. Good morning, Oliver. So, did I miss anybody? Oh, there we go. Matt's giving us some numbers. He's up $400 with 3 running. That was a little earlier. Then he said he got stopped out. So Matt made a little money already on the morning bell there on the Russell. So nice, sweet trading. It's kind of slowing down a little bit here. Usually we'll get the market will run a little bit, then it'll go a little sideways, and then it'll decide what it wants to do. Then it might give us another little run. So we kind of keep watching and see if it wants to give us a little run. But notice that the NASDAQ is just hanging out in the neutral zone. The neutral zone, of course, being these highs and lows that it established. So we got the low, we got the high, came down, touched the low once again, and now it's just kind of hanging out neutral. It's not really doing anything really fun. Now, I was mentioning I got an email. Oliver, way to go, man. Oliver's in the house. He says he's up $900 on copper. So sweet. Nice move, Oliver. So we could go over and look at copper with Oliver. Ramy's in the house. Ram's in the house. Ravi's in the house. So nice to have you guys pop in and say hello. We've got we're watching little cousin Russell down here with Matt. Matt's already made a little money on cousin Russell. I tried to take a couple of trades up against the S&P. Made a little bit of money as the S&P rallied. Not too much. We're up $80. We had to have a couple of recovery trades. Got a little anxious on the S&P and thought we were going to break higher, and it didn't go. And then we took a really nice trade on the NASDAQ, but I got the micro mini in here, so it was only it's like $30, $50. I can't remember. But we caught a good trade. And you know what? That's one of the most important things to remember. We're not here to make a lot of money. Well, we are. But we're here to make good trades. And that's the most important thing. We're here to make good trades. And if you're making good trades on the NASDAQ, micro mini, that's okay too. Don't feel bad about trading the micro minis. I got a micro mini on here. I'm trading the micro mini. We got the micro mini on the screen. We got a lot of new traders, and so they a little bit nervous about jumping in with a big market, and so just feel comfortable trading the micro minis. There's nothing wrong with trading the micro minis. Micro minis are good markets. And when you make your first foray into the bigger markets, trade that little cousin Russell down there. He's not quite as big as the other markets. He's still a full-size market, but he's just not as big as the S&P or the Dow or the full-size NASDAQ, the mini NASDAQ. I'm not talking the full size because we got the one size bigger than the mini, and that's a giant market. We don't trade those at all. Those are reserved for the commercial traders. All right, but the minis and the micro minis, those are for us. And the micro minis are 10 times smaller than the minis, and mostly we trade the minis, but micro minis 10 times smaller. So feel happy to fill your screen up with 4 micro minis and trade those to your heart's content. You'd be happy with them. Nothing wrong with that. All right, we're just kind of, nothing's really blowing up my skirt right now. Just wait and see if anything wants to move. The Dow's trying to break below its channel, so it's breaking out of the neutral zone to the downside. So that's a sell signal right there for us on the Dow, which means that we can anticipate when it's the leader, it's the one going first, breaking out the channel. That means that maybe little cousin Russell down here will give us another drop lower. It's just kind of wandering sideways right now, but we got that flat top across there on the ATR bars. If you wanted to, you could put your position on right now and put your stop on those flat bars and anticipate the drop. There it goes. It's following the Dow, so it's trying to drop. We'll try it. I'm going to tell my trailing stop to trail on instead of price bars back, I'm going to say ATR. Not trail to break even. We're just going to see if that thing won't go with the Dow. And I'm going to, that's a fully off of nothing more than we got flat tops up there that the bars never did touch the yellow dots. And then the Dow started to fall. And so I'm anticipating that the Russell's going to follow. That was my only setup. That's my setup and that's my trigger. And we got 100% down here looming for us. We could put this down here a little bit closer, like 90%. Don't ever expect the market to do everything you expect it to do. It's always a little bit shy of going to 100%. And there goes the Dow. So the Dow is breaking lower on that arrow to the downside as it broke out the channel down. The little cousin Russell's coming back on us. He already doesn't want to go down. Rejecting lower prices. Come on, cousin. Get on your tricycle and go, go, go. So the Dow still trying to go down, but look at the NASDAQ. So we don't have our porpoising yet. There goes the S&P. S&P's getting ready to drop, but we're not getting our porpoise here. NASDAQ's pulling everything back up. Oliver says if you look at the 50-minute chart, pullback till we're 38. Not sure what you're saying there. Oliver, copper might jump. Good dates from China. Oh, Oliver saying that the 50-minute chart, is that on the, not sure. Are you saying copper? Or are you looking at the same markets we're looking at here? We could look at copper. Look, Dow's gone, but little cousin Russell, he's showing weakness. He's coming back. He's like, I don't know if I want to go down or not. NASDAQ's coming back up. I don't like it. I don't like it. Hovering over the exit. There it goes. Now it's starting to move a little in our favor. No, change my mind again. Don't want to be strong here. Oh, look at the S&P pulling back. I don't like it. That's enough of that already. Russell. We got too many other markets starting to go bullish on us here. And so I just pulled the ripcord on cousin Russell and said we're not going to let him take money away from us. Too weak. Should have gone. Got that little inside clearing bar. And that was the pin we had to pull. Sorry, Matt. No nice move to the downside on little cousin Russell that time. Now we're watching the Dow break higher again. Oh, look at the S&P. When are we going to turn on the autopilot, Lan? When are we going to turn on the autopilot? I keep trying to come back to that comment I started. I got an email. Somebody watched our show yesterday, our presentation, and they were like, can't we just trade the moving average? Because we were using the moving average as the indicator of whether the market was bullish or bearish, right? And then we were using the ATR as our signals for entry on the ABC patterns, on the Elliott wave. So that's what we're doing, right? So we're looking at the little ABC patterns, and that's what the average true range is pointing out. So here we go. If you want to look at the Dow, that's kind of a good example of this. A, B, C. So there's your Elliott wave. And it's showing the Elliott wave shows the first down, the counter trend, the second down, a third counter trend. So this would be, if we're going to get an Elliott wave, we're going to get another ABC here, right? A, B, C, and then down once again. That would be a full 3 drive pattern on the Elliott wave. Drive 1, drive 2, and then we'd look for drive 3. So there's your Elliott wave, and these little arrows are showing you those Elliott wave moves, right? The trend, the counter trend, the trend, the counter trend. We don't want to trade the counter trend because the counter trend is oftentimes too short. It's the trend. Oh, look, now Cousin Russell's going to try and drop once again. We got a pullback that stops everybody out, jabs you, takes out all the stops, and then starts to turn and fall once again. Now let's see if little Cousin Russell can follow through, because that would be the follow through right there we'd be looking for. You could put your position on right there, put your stop on the yellow dot, and anticipate a continuation of the fall. See if it goes up and stabs that yellow dot a second time. The market's just died on us. We're on the back side of the trade. Look at MACD. So MACD tells you when you're on the front side and the back side. So here's the front side of the trade. MACD says we're on the front side. Now we got MACD saying, hey, Lan, you're on the back side of the trade. Don't expect anything too big here. And notice how MACD's still climbing. So MACD's trying to help us out here, trying to give us a little clue what's going on. We're on the back side of the trade, which means probably no trend in through here. See if it can't start to break lower. Nope, it's going to stab that yellow dot again. We just kind of lost our momentum. Yesterday was such a beautiful day. I was hoping for a replacement. All night I was dreaming, I'm going to make so much money tomorrow morning. I'm going to trade the opening bell with everybody else because yesterday was so beautiful. We're going to have a repeat. We're going to have another day so beautiful. Where is that beautiful day? Russell's trying to break above. If he holds above that yellow dot and gives us a rally bar, maybe we'll get an uptrend in little Cousin Russell down there. But I was trying to explain that somebody asked if we could just trade the blue arrows. It's like, why worry about the yellow ones? Just trade the blue ones. Just trade the trend. You can do that. I'm certainly, absolutely. You don't have to make it as complicated as I did yesterday. You can start off really super simple. In fact, let's go do it. Let's go do it. Let's not just talk about it. Let's go do it. Here we go. We're going to come in here and we're going to go into the autopilot. And in the autopilot, this is where we had our YouTube class, ATR, right? Oh, there it goes again. There goes little Dow starting to drop. So we're going to come in here and we're going to use the moving averages instead of the ATR. So I'm going to turn off the ATR. Let's just get rid of it. It's not there anymore. So now all we have, and let's get rid of the VWAP because that's confusing. Now all we have is the moving averages that we had turned on yesterday, right? 28 period moving average and a 3 period moving average. The 3 period moving average is simply just going to be, the average of 3 bars. So it's the price. So that's basically price of the market trading, moving against the 28 period moving average. Both of them simple. Both simple moving averages. And so now you can see the arrows. And this is why the gentleman was asking. He's like, can't we just buy here and sell there and sell here and buy down here? Absolutely. You can do that. Absolutely, you can do that. So we come in here, and the way we do that is we come into the autopilot, and we say, we're just going to trade the moving averages. We're going to trade it with what quantity you want to trade it with. Let's trade it with quantity 2. Now, the problem with this strategy is when we get down here into the exit. So we're not going to worry about the time restraints. We're not going to worry about anything about entry other than we're just going to use an entry strategy. Thrust signal prevention. Now, this is something that we need to talk a little bit more about, but we're going to skip that for right now. And I'm going to turn off the trend, and I'm going to say I'm going to take longs and shorts. Now, remember, yesterday when we set this up, we set it up with longs with the trend only, and we were using the blue arrows as the trend. But now we're going to just trade the trend. So long and short, we're going to go long and short. We don't care. As long as the market moves, right? We need it to move. If it just goes flat sideways, that's where we get ripped apart. So we have to come up with a stop or not. We don't have to. Remember, we can swing trade. Now, remember, that's a term that just really irritates me because swing trading is buying every time you get a buy signal, selling every time you get a sell signal. That's a swing trade. And you can do that on any time frame. You can swing trade a 1 minute chart, and that's okay. Kids on YouTube get that. They started calling that swing trading when you went out and traded on a daily chart for long-term investing. Oh, that's swing trading. No, that's not swing trading. That's investing. That's position trading. Swing trading is buy, sell, buy, sell, buy, sell, buy, sell with every buy signal, every sell signal. That's a swing trade. Okay. So don't get those two confused. Let's get with the program, call things the right stuff. All right. So ticks, 15 ticks back. How far do you want to hold your stop? If you're going to do this type of trading, we might just turn that off altogether. And the only way you'd get out is if you got a reversal arrow. So you'd get a reversal arrow, generally pretty close if it swings back like this, right? See that? You're going to get kind of a little whipsaw, but your stop is not going to get you out. Your reversal arrow is going to get you out. Therefore, you are swing trading. Okay, so your reversal arrow becomes your stop. So that's how it works. So we just leave that off. We have no stop. And we come all the way down here to exit on primary signal. Does that mean you don't have to? I mean, does that mean you no, of course you can use a stop. You know, you can come out here and say, well, I'm going to put a parachute stop inland just in case the computer dies, right? And I'm left hanging. So you put a stop out there, maybe at 50 points. I don't know. We'll have to look and see how big that is. $250. So $250 from your entry. Yeah. See, that would be a pretty conservative stop considering that you're swing trading on just the trend of the market. So we're going to put in 250. That'd be a $500 because we're going in with 2 contracts. And there you go. There's your trade. Now there is no trailing stop. At this point, we're going to leave the trailing stop out there. No trailing stop because we're just going to use the reversal arrow to get us out. And then you just hit start trading. And there you go. Now you're swing trading the Dow on the trend only, just trading the trend. So now we can just leave that one on up there. And now we don't have to trade that one ourselves. We're just going to leave it and let it go. Had we got into that thing, we'd be up right now. See, this would get us in. Let's say we got in right here because it's going to get you in on the close of the bar that the arrow is pointing at. So it'd be up $355 right now. Okay. So that's that strategy. And you just have your little start arrow there. And it says, this is where we're going to start watching the market for you. And we're going to trade the next time we get an arrow, and away it goes. But so far, the market's just kind of died on us. Look at Russell. Even Russell can't get a trend going. NASDAQ sitting here doing nothing. Man, today's the day we should have been doing the autopilot lesson and trading yesterday. We should have been trading yesterday and learning today. Instead, we think we're going to trade today, learn yesterday. But we got the autopilot running on that Dow now, but it's just on the trend, so it's not got the ATR in there. We could set that up on the NASDAQ. So let's come down here and we'll use the strategy that we set up yesterday on the NASDAQ. How about that? We come in here and yesterday that was, we just used YouTube class, didn't we? Well, let's come down here to this one where I've got ATR NASDAQ swing. Okay, so I've got them set up. Now you notice on mine, I've got in here, if you can see, sometimes I actually switched this morning. I was like, I think I'm going to put the presentation on the larger screen because I got a big 4K monitor over here and this is a 1080p monitor. And so I was like, well, I think I'll project the 4K monitor. I put it over there and then the projection was like, oh gosh, I don't think they'll be able to read the words. Sometimes I worry you can't read the words on the 1080p. I put it on the 4K and the letters, the words got so tiny I was worried you wouldn't be able to see them. So I went back to the 1080p monitor. And so I'm broadcasting the 1080p monitor. Hopefully the words are big enough you can read them. But you'll notice that in here, I created different autopilot settings for each market. I've got one for the Dow, I got one for the NASDAQ, one for the Russell, and one for the S&P. And the reason I do that is because they're different markets, right? And we can trade differently. And I like to have variations. So I might trade on the Dow, I'll have one variation of the strategy. On the S&P, I have a different variation of the same strategy. And on the Russell, I have a different variation of the strategy. And then down on the NASDAQ, maybe I'll leave that one. I either have a different variation. So I got 4 autopilots running on all 4 markets. Yes, you can do that. Or I will not actually put an autopilot on that one, and I'll trade that one myself manually and see how I can do. So different ways to handle things. So I'm going to come in here. Let's come down. We're going to put one onto the NASDAQ, right? NASDAQ is, we're going to use just kind of the one we set up yesterday. So we're going to have the ATR stop. We're just going to trade. We're going to trade quantity 3 over here because this is the micro mini. So that will give us more opportunity to, if we can get into a trend, to actually do some things like castling and pyramiding and pillaring and show you guys some advanced structure. I'm going to get rid of the time restraints because I'm going to sit here. I'm not going to turn the time restraints on right now. I might turn those on later. Oh, there we're getting market's starting to move. There we go. Look at this. And we're not trading. We're working on our settings. Okay, so we're going to come over here. We're going to do a market order. We're going to don't enter if the market is more than 57 ticks on one bar. I'm going to get rid of that. So we're just going to keep it simple, just like we worked yesterday. Stop order. We'll drop this down here to 50. And then the ATR is we're going to trail the ATR, and we're going to not have limit orders, and we're just going to stay in until because we're going to work. Okay, I think that looks good for now. We'll just set that up. I wanted to, a little bit slow. I thought I was going to catch that signal right there, but I didn't. So we'll save that, and we're going to go ahead and start the autopilot. I might go in and adjust some things as markets move forward. You know, you can always adjust them. That's the great thing about the autopilot. You just, oh, I wanted to make a change. You just turn it off, make the change, turn it right back on. See that? That's the difference between having a black box. There we go. Look at the trend. Okay, so now there's the trend. This is kind of the reason why we don't use the trend, because it's kind of laggy. All right, it's kind of laggy. So there's where we would have got in, and right there's where we just got out and got reversed our position. So this whole market went all the way down, and the reversal didn't make us any money. And that's real common with these markets. You'll notice that when the market's kind of not trending, when the trend is not your friend, you'll notice if you draw a horizontal line across these markets, you'll notice that they switch right at the average true range here to the average true range here to the average true range here. And you'll see they're just kind of almost exactly the locations. The arrows where they point down is exactly where you'd reverse the other side. The arrow you point down is exactly the place where you reverse the other side. See that? See how that market's just doing this little snaky thing back and forth across the arrow. And so each arrow would have got you in here and got you out there, got you in here, got you out there, got you in here, got you out there, and they never would have made any money. Just like right here on the Dow. This one here, you got your arrow, you're thinking, hey, I'm just going to trade the trend line. I'm not going to do that, all that, you know, the trend is your friend and the counter trend is your enemy. And I'm going to just, you know, I'm just going to trade whenever I get a break below the 28 period moving average and a break above. But the problem with that is by the time it makes that curl and that turn, unless the market's really super strong, making big moves, it just sits there and goes back and forth. And the entry point ends up being the same spot as the exit point, and you don't make any money. That's called the Darvas box. All right. So we're going to talk about Darvas boxes here at some point when we get into the bulls and bears. We'll talk about the Darvas box. Okay. So we'll just kind of let these markets go. Now, little cousin Russell up there looking like he wants to be bullish, and now he's pulling back. He's flagging, but he's also bouncing against that 50-period moving average. So is he going to go up? Well, we don't know. Okay, look at the Dow with our autopilot trying to go long on the trend. So that's failing on us. We got our stop in there. We don't have to have our stop because the reversal would take us. Oh, we just got stopped out on the Dow. Okay. Now little cousin Russell down here trying to test that average true range, poking his steely knife through it, jabbing it. So that's why I don't just do the Dow. That's why, like on the Dow, that's where I just, buy and sell and do the swing thing. Because unless the market's really strong, you just sit there and go back and forth across the Darvis box and you never make any money. Usually you lose money. If it was that easy, we'd all do it, right? We'd all be rich, rich, rich beyond our wildest dreams. It's that easy when the market's taken off and trending like a crazy dog like yesterday. It would have been just fine. But when the market slows down and moves a little bit less aggressively, like today, I mean, look at NASDAQ is a perfect example of a dead market. That thing is as dead as they get. That's a dead horse right there. So we took a nasty hit on the Dow. Waiting for the Russell. Russell wants to kind of turn. Okay, so let's say that we were in this long from the arrow on the autopilot. Now we're getting the little ABC pattern, right? And coming up, let's say we got stopped out. So now it's our responsibility to use our semi-automatic orders if we want to get back in on this thing, to drop that in there and say, okay, we're going to augment the autopilot. The autopilot just rallied up, got stopped out. Now, if it wants to go again, well, it's not going to get another arrow from the autopilot to the long side. If we think that market's going to continue through that ABC pattern and we got stopped out with the autopilot, we can put in an order to take the next position from the semi-automatic point. All right, that's why you have both a combination of automatic and semi-automatic working hand in hand together. So we can come down here. Did I turn what? Oh, I turned the autopilot on the NASDAQ. Now, if it goes down and breaks below those yellow dots, okay. Now look, the Dow, the arrow on the Dow just took a short on just the trend. We're just trading the blue lights, the blue arrows up here. We don't have the trend on. We're just trading the trend, not the average true range. And look, as soon as we got the sell signal breaking below that 50 period moving average, it starts to return on us. Dirty dog. So the concept of doing the dual strategy like we set up yesterday is that we just use the trend of the market, but then we use the ABC patterns of the yellow arrows. Okay, it's still, I'm watching cousin Russell down here, see if we're going to get a rally out of it, a second leg up, but it doesn't look like it. It looks like it wants to break below the average true range. We're still in a downtrend on the Russell, right? So as far as the Russell's concerned, we're still in a downtrend, aren't we? Yeah, from way back here. Back here at 6:28 a.m., we got the down arrow on our crossover of the, are we using 50? Yeah, we're using 50 today, not 28. Let's clean up some of this, get rid of these drawings. So we're looking for it to rally. If it breaks below those yellow dots, we'll throw this order away. But look at the MACD. The MACD is trying to cross. It's trying to cross over and give us show some strength to the upside. I've only got one contract in there because the market's just being quiet and don't want to take big risks. But we're down $400 off of that Dow example because that thing, we're just taking the blue arrows, right? And there's a big gap between the arrows. There we go. And we're long here on little cousin Russell. Cousin Russell is not going to recover the $400 unless it goes to the moon with a single contract. But at least we're showing the strategy there. So there's our little break. There's our little flag formation, our little pennant right there, triangle. Now it's trying to break out the top, and oh, it's going to fail. I don't really think a reversal is the right thing to do, but we'll try it. So we take too short because the long failed. So if the long failed pattern is oftentimes the strongest pattern, but I don't think we're going to get any strength out of here. You only really want to do this reversal, back and forth reversal, if you're in a strong market that's really trending. This is all it's doing, is just kind of beating us up. We're having a bad day, bad morning already. Okay, where are we going to put our stop? I'm not going to reverse this thing again. Maybe we will. No, I'm not going to. Not right now. Just take that one off. Let's watch and see what's going on. Maybe we'll get some money out of the Dow. We're long 2 on the Dow, on the autopilot. We've got our parachute stop out here, $500 away. Russell's just trying to go long again. See if we can't get something going here on the Dow. The Dow's breaking a little higher. We could actually add in one more. We'll see if we can get some strength out of the Dow. So the autopilot got us in, but it's starting to move, so we can come in and trade alongside the autopilot now. The autopilot's still turned on the Dow, but you can see I'm trading here too. So I added in another position. So we're long 3 because it looks like it wants to show some strength to the upside as it's breaking above that previous lower high. Well, look, Russell's breaking out to the top. So it broke out just to come back, stop us out, take a little bit of money away, and start to rally once again. But now Dow's starting to lose its strength. Come on, Dow. We got 3 contracts long on the Dow. We're trying to break above this previous high. I've got that. That's that little pattern, that little failure pattern. And we need to see it close above there. Otherwise, it's going to come back and stop us out. Showing too much weakness. Watching the tiny chart in the upper right-hand corner. Took a little profit. Not much, just enough to say we did. Chip away at our massive loss at this point that we took when the autopilot on the Dow got stopped out. Come on, keep it going, keep it going. Okay, we got a we got a reversal arrow on the Russell. Now on the Russell, we got the long position, and we got the indicating that the market has changed now from bearish to bullish on the Russell. There goes the Dow. There we go. Now somebody's doing something out here. Oh my goodness, we had our recovery and I wasn't paying attention. See if it can come up there again. What was our recovery? 725. See if it can go up there one more time. There we go. We got our recovery back anyway. Now we can reset and do something, start to trade once again. So we're not red on that autopilot whipsaw right there anymore. And that's kind of why I don't like to do just the trend itself. I like to have that other component piece to our trading strategy. AK saying, I see you manually drawing ABC patterns. Is that possible they program to show on the charts automatically when they form, as well as the 1, 2, 3, 4, 5 pattern for long-term trading stocks? Yes, absolutely. You can do it. There's a tool in here that'll do that for you. I like to do it manually, but you can right click on the chart, say chart overlays, and come down here to zigzag Elliott wave. And there's your your automatic drawing of your Fibonacci Elliott wave patterns. And it also does the calculations for Fibonacci. So you can see that you got your projections and retracements on here. So there's 64% retracement against this overall longer term trend. The arrows are covering up those numbers right there, but that's 133% projection off of this push higher. So yes, AK is asking if there's an automated way to do those ABCs, and there it is right there. Now, the whole idea was, the reason we have the manual and the automated both is so that you can then take the automated and then use the manual to project out into the future. So then you can come in here and you say, okay, well, if that's where that is, the next leg of the automated system would be down here. And that's what that white line is. That's part of the projection of the next leg, or the next zig, or the next zag is what we call those. All right. So then you can project out into the future where the next zig and zag on the automated system, because the automated system can only take the historical data into consideration. It only takes what it has available to it, which is the most recent price bar. But we like to project out into the future and see where the market might be going sometime in the future. And so we can lay this ABC tool over the top of the automatic zigzag, and then it'll project the future. So that's kind of how those are meant to work, hand in hand. I don't generally have the automated turned on, just for the sheer reason that it just puts that much more stuff on the screen. So we can turn it on if it's helpful to you, but I generally just turn it off and then just use the manual one. So it depends on how you like to look at the screen. So we can come in here, turn it on. Let's turn it on down here on this one. So there's how it would look on this one. Now, of course, you can adjust it, because you can come in here. Let's go into the zigzag, and you got your zigzag settings, right? You just hit auto scale, and auto scale is going to find the highs and lows. But if you're like, well, look down here on the Russell, I want it to count this high, not as just one big move, but I want that to be an ABC in there. If we were to draw it manually, we would have drawn an ABC like this. So why is the computer not doing that? Why is the manual one going all the way to the top? Well, because the mathematics of the manual zigzag are not taking that pullback into consideration. You're like, well, I want it to. Okay, well, tune it in. You have to tune it in. You have to tell it what sensitivity you want. So we're going to come in here, preferences, zigzag, and then we can see this little slider. You can slide it and make it more sensitive or less sensitive. And you're going to get that. You're going to get the sensitivity that you're looking for. There you go. Now you got your, let's get rid of all the drawings. Now you can see your zigzag is taking that into consideration. All right. So it took this little pullback into consideration. You just had to tune it in a little bit more. And so that's the level that market's moving at. So you can just leave it there for now. And if it starts to change, if it gets more aggressive and more volatile, then you might have to change the sensitivity on the zigzag again to identify in past where the market is moving. And then you can use your next tool, your manual tool, to figure out where you think it might go next time. So that's projecting out into the future off of the current settings of how the market was moving in the past. Kind of cool, kind of a neat tool. That's how we do it. All right. Hope that was helpful. It says very good. All right. That's what you're looking for. How about patterns such as head and shoulders? That would be the same tool. So the zigzag is going to point out all those patterns for you. And then you're going to use your manual patterns or your manual tools to help you identify those, right? So the zigzag, for example, this might be, let's say, it's not a perfect one, but let's say that's your head and shoulders. So that would be your low point. So you would come in here and you say, well, there's your left shoulder, there's your head, there's your left shoulder, there's your neckline, there's your right shoulder. Of course, I just do that upside down, so that makes me look stupid. It would be more like this. Here we go. So we're going to go into the right. There's your head. Oh, I'm going to grab the wrong tool. Okay, let's try again. There's your left shoulder. There's your head, or your neckline. There's your head. There's your right shoulder, and then there would be your what in the heck is wrong with me? What did I just do? It's upside down. I'm trying to use yeah, that was right. Why didn't I draw it right? So we got our left shoulder, our neckline, our head, the other neckline, which is way the heck up there, and then that's our right shoulder. So there we go. Oh, it was that thing that was making me. get rid of that. Not that that was really the pattern, but that's the idea. So you use the zigzag to help you identify those reoccurring patterns like head and shoulders patterns, 1, 2, 3 formations, ABC patterns using Fibonacci and Elliott wave, and then you can use your manual tools to draw over the top of the zigzag because it's going to show you where those peaks and valleys are. So that's how that works. You use them all in combination one with the other, but the head and shoulders and all those tool patterns are all identified through that zigzag Elliott wave tool, because Elliott wave is all made up of all these different patterns that you're just talking about. All right, so what happened to our positions? I got distracted with zigzag. Let's come over here and turn off zigzag. And now let's come back over here to charts, trade. So we are taking a short position on the NASDAQ based on what? How come we're taking a short position on the NASDAQ? I turned off the trend in the autopilot. I don't have trend. Oh, I do have trend turned on. Why did it take a short position there? NASDAQ, we take the ATR, market order, MNQ, 1 minute. Oh, I put ATR in there. So I just told it to take a trend of its own indicator. We need to change that. Stop. Put that down here on moving average. Save that. Start again. Okay. It says there's existing orders on there. Do you want to still want me to turn it on? I said yes, because it'll just clear these out anyway and start the trade. I want to have that stop a little further back. I want to have that stop. Oh no, 50 ticks is okay. So we're making money on the counter trend. So this is actually a counter trend. So we'll see how far it goes. It's moving the stop down on the yellow dots. We got 3 contracts and we're flagging. We could actually come in here and add one if we wanted to manually because we're flagging. Oh, there we go. We got it. Okay, and as it breaks across this low, let's bring this full screen so you can see what's happening. Now what we could do, we're on the counter trend. This market is actually showing bullish. So it's like this, up like that, back down, and we would anticipate a turn in a rally once again, right? Continue this uptrend. Not sure if that's what it's going to do, but as where it's showing strength to the downside, and it did break the yellow dots, and we're coming down. We're breaking a previous low right there. So we could castle. What's castling? Lan, you've been talking about it. What is it? Castling is taking profits. Now, I don't usually castle until I can get my stop order ahead of the market, ahead of my entry point. So we're still, but I want to example it for you. I want to show you what castling is. Castling is coming in here, and I'm short 4 contracts. Let's delete this. So we're short contracts on the NASDAQ, which is the micro mini. So we're making look at that. We're up $400 on the micro mini with 4 contracts. You can make money in the micro minis. Don't feel shy to trade the micro minis. You can trade them with larger quantity, but here's a castle. I'm going to come in here, and what I'm going to do is I don't want to reduce my quantity of number of positions. See, it's called short 4. So I want to keep 4 contracts short, but I want to take profits. How do I do that? Biggest problem is you run in if you're only short with 1. How do you do it? So we're going to sell another one. So we're now short 5, which dollar cost average us in, but we're going to immediately take one back off. So now we're still 4 again. See that? I just took profits. And you're like, well, why didn't you what's the difference of just saying, just taking one off and then putting one back on? Because a dollar cost average you differently. It pushes your break-even point way closer if you do it that way. So by adding it in first and then taking it off, as opposed to taking it off and adding it back in, your movement of your average price doesn't jump quite so close to the market. And that's how you keep the same quantity but take profits along the way. without moving your stop so aggressively or moving your average price so aggressively towards the current market price. It's just a little trick, you know, kind of like playing chess. It's just, little trick you can pull. I call it castling. Now, look, this is the NASDAQ. If we were doing this, I hate to say it this, if we were doing this in the full-size NASDAQ, we'd be up $3,000 right now. But because we're in the micro mini, we're only up 300. But don't feel bad. Hey, $300, that's a good trade. It's not 3,000, but it's 300. Now look, the Dow, the blue arrow says that we just changed directions. Now, if we were trading the other strategy, that wouldn't have got us into the market. It would have just told us the market has changed to bearish again. See the problem with just trading the trend, just the back and forth? Unless see how far down that move the market already is. It's already clear down here before that arrow on that 28 and we're using the aggressive model, 28 period average. That's why I don't just trade the trend. Can you do it? Yeah, you can certainly do it. In times, there's places where it would have been great. But for the most part, if the market's just even a little bit weak, it just gets you in so late that it's not a good strategy. And I wanted to kind of example that for you and kind of show you can do it. It's just not the best strategy. I would prefer to just use the trend to tell you whether you're going to be bullish or bearish with the other tools. Okay, I'm going to kill that because it's already taken all of our money away. And I'm going to turn off that autopilot. It's already lost us way too much money. But it was a good example. All right, it was a good example. Okay, so let's come in here. And we're still short 4 on the NASDAQ. See if it wants to push lower. We got our trailing stop would be right there. I haven't got it turned on. Now look, I'm going to show you another little trick in track and trade. Let's say you want to put your QOCO on or your OCO on. You just right click on the little triangle, say add OCO, and now you've got your stop and your limit pulled out here, and you can move your limit up there. You can put your stop in here. I'm going to say edit and trail. I'm going to trail my stop on the ATR. There we go. Now we got our trailing stop on the yellow dot. We're way up here with our average true range. The market's starting to drop. We can castle again. We can come in here. I'm going to sell one, and I'm going to buy it back. So I just took some profits. I'm going to do it again. Sell one, buy it back. Not worried. I still have quantity 4. My stop is still ahead of my position. Still have some money built in there. Is that the one we're on? That's not the one we're making money on. Where else are we making money? Are we up $245 on the micro mini? Or have we got a position over here in Russell? No. 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 It's all right here. So now the question is, how far down are you going to let this baby run? We got 4 on the stop. We got 4 on the limit. If this market wants to keep going, I don't want to limit out, right? So we're going to delete this, and we're just going to put our trailing stop at quantity 4. So we're just trailing quantity 4 now. We could castle again. Sell, buy, take some profits. So now we've recovered all of our losses. We're still up $274. We caught a nice trend. The market's going. Right there is where we had our limit to take us out as it tested this previous low. And that'll probably bounce right there. But we're going to wait. We're going to, I'm going to take one off. We're going to take 2 off. And we're going to adjust our stop. Now we're going to run with 2. And we're just going to let it go and see if it wants to get stopped out at this point. So we've taken our profits off of 2. We got still 2 runners. So if it wants to break below that white line right there, we'll just let it go. I got to remove this. Sorry about that. Here we go. We're looking to break below that low point right there. Boy, today's been an up and down day, hasn't it? Look at it go. There we go. That's why you don't take all of them off at your target. Take some of them off at your target, because maybe the market will continue to run past your target. Boy, that's a lot. That's a big move. That would be if we'd still be up. If we were in the full size market, not in the micro mini, that'd be $2,000. Matt, did you catch this one? We kind of caught this one on accident, didn't we? The autopilot caught it for us. This is an autopilot trade. What are the other markets doing? Well, the S&P's dropping the same. If I were going to do a swing trade with an indicator, I'd be more likely to swing trade the ATR than the moving averages. Moving averages lag quite a bit. The ATR is a little bit more aggressive. And oftentimes you'll see that I've got the ATR. If you notice on here, I've kind of moved the ATR up. I usually say 1 and 1, but I moved it a little bit more aggressive. I went from 1 to 1 to 1 to 0.9, and sometimes I'll go 0.8 and even 0.7, which really sucks that dot right up in there really close. But at that point, you might as well just be trading on the Heiken Ashy bars. Okay, the auto trend lines, that would just still be the zigzag, would draw the trend lines for you. So that would be your, like you can see over here on the Russell, that would be your auto trend lines. We use that zigzag for a lot of those different types of things that you're talking about. Here it goes. Look at it go. All we can do, we're letting the computer trade now. We're not doing anything. We're just watching, letting the computer trade that position. I was playing around a little bit myself before. We could castle again right now, take a little profit if we wanted to. Let's pull it back full screen. So at this point, we can castle one more time. We'll just take a little profit as it's starting to slow down there. I'm going to sell, and then I'm going to buy. So I'm still short 2, but I took some profit. You don't want to go crazy on the castling because you're paying a commission every time you do it, but you're going to pay it anyway. But that's how you take profits and maintain your same quantity. Looks like it's going to pull back here. If it doesn't break the yellow dots, which is where we have our stop, we could, because it's starting to flag this big drop. That's a flag. We got room to move one in. We'll see if it wants to go some more. But only if it breaks that green bar to the downside. Kind of a rough place to be adding on to a position short. It looks like it's quite extended here, so, but you never know. So we've added in a third. Notice that we were 3 short. We've only got to stop for 2. So we have to keep that in mind. We might have to adjust that here soon. But if it'll drop, I could just take a profit and just keep the 2 running again, right? So stop moved in. It's backing off. I'm going to buy one back. That third one I put on, I just took it off because it's still in the flag. We could try again with another flag, short flag. The way we'd do that is we just drop this in here just like that. And now if it drops below that red bar, makes another red candle to the downside, we would take another short position. But it's getting weak right here. I don't think that's going to happen. Maybe we could blow this up a little bit more so you guys can see a little better what's going on. Is there a way in the autopilot you could set the ATR to not get stabbed out, but only close your position if the ATR changes from bullish to bearish or vice versa? Well, you can do that with a different indicator. But if price goes to where your stop is, what you're saying is, don't stop me out if it touches my stop. Just don't pull your stop in so close, because as soon as it touches your stop, you're going to get stopped out, right? So you're saying if the ATR, if it goes up and touches your stop, don't get stopped out because it might fall below the average, the ATR. So the only way to really do that is not to have your stop in that location, right? Gee whiz. Am I understanding what you're saying? So you can use a different indicator. So we could use an indicator like the parabolic SAR, for example. Okay, so there's the PSAR, and it holds the stop back farther. Now, anytime the market touches your stop, it's going to get you out or in. The way you could do that, gee whiz, is you could not use a stop. I mean, don't put a stop there and manually say to yourself, hey, if the market goes up and touches my yellow dot, I'm not going to get out until it closes above the yellow dot. And then you would have to manually do it. But anytime you've got the stop, because the stop is at the exchange. So the exchange knows where your stop is, and it's going to fill it for you, and it doesn't know it's sitting at the ATR. So it doesn't have that knowledge. You would have to do that manually, and you'd have to do it by not having a stop, by saying, okay, I'm going to wait and see if it closes above those red dots. If it does, then I'll get out, and you'd have to do it manually. Because if you have a trailing stop, it's going to hit it, and it's going to take it out. I think that's what you're asking. Okay, I think I answered his question. I think I answered the question. Boris is in the house. Greetings, Boris. Glad to have you. Coming along for the ride. We're trading the indexes today, and we're talking about autopilot, and we're doing some examples on how to do some of these different things, the automation of trading, and that's what we're kind of focused on today. But we're kind of running out of time. Looks like the day is over for me. I'm going to go back to cooking me some eggs and come back at 10 o'clock and turn these autopilots back on and see if we can't turn those machines back on. You guys ever see Eddie Murphy's movie, Trading Places? If you haven't seen that, you need to go see that movie. That's all about trading in the futures market. It's a really good show. Eddie Murphy, Trading Places. Turn those machines back on. All right, guys. I think we're going to wrap things up here. We ought to end with a Sunday school lesson. I haven't done a Sunday school lesson in a little while. I got it staged up here so you can see the Sunday school lesson. Let's see where we're at in our Sunday school classes. Where did we get to in Sunday school? Is this our Sunday school? Did we do this one? Volatility. Volatility is your friend. Short-term day traders and or scalpers love volatility. Volatility is what moves the markets. News, weather, government reports, earnings, interest rates, and technical traders. No volatility, no trend. No trend, no trade. All right. We need volatility. We like volatility. A lot of people are like, oh, the markets are too volatile. We don't want to trade volatile markets, but not here. Not when we're trading in this market. We want volatility. Yesterday, we had a lot of volatility. Today, we picked up a little volatility right here. Had a nice little run in the S&P, a nice little volatile run in the NASDAQ. That's volatility. If you don't have volatility, then the market just goes sideways, right? So it goes sideways. This is no volatility right here. Who made money there? Nobody. That's where we lost some money. So volatility is what causes this here. Volatility is what causes this here. So we need volatility. We like volatility. And those are some of the things that causes volatility. News, weather, government reports, earnings, interest rates, and technical traders. Why do we say technical traders in there? Because the fundamentals are driven by the long-term trends are driven by the fundamentals, the fundamental nature of the market, right? How the market is performing. Technical analysts, that's what we are. We're technical traders. We're going off the movement of the market, the movement of price. We're watching prices break higher, break lower, make higher highs and lower highs and lower highs and lower lows, right? That's technical trading. And so we trigger off of those things. And so we are part of the volatility. We cause volatility in the market. And so we are a little bit of that volatility. Okay, so that's why technical traders is bumped in there to volatility. So no volatility, no trend, no trade. All right, guys. I wouldn't be doing my due diligence if I didn't remind you to stop by Pit News Magazine and pick up a copy. If you like all the strategies and the things we're talking about in here, those are all published in Pit News Magazine. And as I talk about things in here and we learn things that you guys are interested in, we'll write articles about them and publish them in Pit News Magazine. Pit News Magazine comes out every month. You can listen to it. It's got audio, so you don't have to just read the articles. You can listen to the articles, read along with it, and then look at the examples. You can, sometimes we'll even put video in there, so I'll have video examples in there. But you can get an entire year, 12 issues of Pit News Magazine for $1. $1. Land Live, use that coupon code. Shows that you've been here, and this is where you got the information to sign up for Pit News Magazine. Use Land Live $1, and you get 12 issues an entire year for only $1. I promise you, you're going to love it. You're going to love it. All right. All right, guys, I'm going to cut you loose. We will catch you tomorrow. Thanks for coming by, and hopefully this was helpful and you learned something today.